David, so a lot happened. First of all, we got new mugs. We're pretty excited about that. I see they didn't give you one, but
no, I don't have one. No.
You know, last week there wasn't too much going on. There wasn't very many reports. You talked about it being a divergent market where a lot of money is sitting on the sidelines. It doesn't seem like one of those markets where it makes sense to sell, but doesn't make sense to buy. And I think it's putting a lot of money on the sidelines. So this week, a lot more reports hit the market. We're getting mixed reports. What say you?
Well, it's a literal tug of war. Pun intended. You know, you've got on one hand, you've got what's going on with Iraq, which is definitely affecting, you know, oil markets, which will eventually affect gas prices, which can eventually affect retail sales, which is bad. We had housing numbers come out for new home sales, which blew through the roof, I think up over 18%, the highest since May of '08 and the highest percentage gain since 1992. So you're having this tug of war literally with wars, Ukraine, Iraq. Fortunately, right now for us, that is not hit southern Iraq, which was where most of the oil fields are. So that's kind of the good news there. But you know, we're starting to see a lot more volatility. I mean, the market's really kind of hanging in thin air right now as far as the rate of change that's happened and the strength of this market. But we're moving into earnings season that's coming into July. That's going to tell us a lot. We need to have numbers really beat. We have price earnings ratios that are in about the 18% range, historical around 16. So we're elevated. What that means is that we need to have companies outperform, not just come in line. So a lot's going to be told in the next probably couple, 3 weeks, 4 weeks. You know, so we haven't had a 10% correction in 3 years, which is a long time. So again, it's kind of this push-pull market, and we're just have to see what's going to happen here.
It's a confusing one. Hey, last week, Janet Yellen, she reduced the bond buying program a bit. I think we're down to $30 billion a month now in buying of bonds and treasuries. But she also mentioned that the Fed would be tolerant of inflation. What does that mean?
Well, that's what's holding up the market. Really what she's saying is that they're talking about unemployment down at 5.5% potentially. Inflation, their bogey was 2%. They're talking now like 2.5%. And so if you think there's a floor on interest rates, which it looks like there is, it really is good for stocks long term. And so, you know, she's just kind of talking out both sides of her mouth. We're down to $35 billion in bond buying. That's going to be cut to zero. But they can get away with that relative to keeping interest rates, short-term interest rates near zero. And so, you know, they're going to be a lot more tolerant with the employment numbers and with the inflation numbers, really, so they have some rope to play with once the bond buying is done.
All right, if I'm watching this show right now, I know that David Reyes is a financial lead on this show. You're also heard on KCBQ. You have your own radio show on KFNB on Sunday mornings as well. What is a good takeaway from this market? What can we take away from this show as far as advice? What can we do about it?
I would say, you know, a couple things. I would look right now. We have a very unusual market in the sense that you're having really bonds do very well right now and stocks, which typically they're non-correlated. They move in opposite directions. And I would look to raise a little cash right now and look for alternatives such as real estate, non-traded REITs. I've talked before about what's called master limited partnerships, which are very tax-efficient vehicles. It's actually the transportation of oil and gas. Different types of investments that are not so tied to the stock market that can reduce your risk in the short run. But you know, just looking at different types of investment strategies other than stocks and bonds right now.
Yeah, it's interesting. You've used the term tug of war a couple times, but then you just mentioned stocks and bonds. Usually they play a little tug of war with each other. They both seem to be going up, which we'll talk about a little bit later in the show, is helping mortgage rates and opportunities to refinance to buy a home. The best thing I could advise you to do is get a second opinion, get a review of your financial plan. That doesn't mean you have to go and buy new financial products or realign your entire financial plan, but get a second opinion. I have a guy right here in David Reyes who can do this for you. Usually these things can cost thousands of dollars. David can do it for you for free as a viewer here today. I encourage you to connect with him. Go to reyesplan.com and have him take a look. Make sure you're hedged against things like inflation. Make sure that you're well diversified, or even things as simple as make sure your 401ks and getting eaten up by fees. These are things that he can look at, review, and we do this with no commitment. That's my job as a consumer advocate hosting this show for you, is making sure we properly align you with these experts. David, great Reyes report today. Appreciate you coming in here.